Hello friends, and welcome to today's video where together we'll answer probably one of the most important questions the internet has been asking itself over the past few weeks or months. Has the bear market started, or are we still in a bull market and just experiencing a correction phase before further growth? Let's analyze the facts and technical data today. No emotions, we're just looking at the data. To really understand whether we're in a bear cycle, whether a bear cycle has started, or if a bull cycle has begun, and what might come next, what do we need to do? For that, we need to use a larger time frame. I'll use the weekly time frame. What's happening right now? Right now we are in a situation where the price of the asset has dropped 35% from its peak. Of course, for some people this might seem catastrophic. It's a disaster, that's it. We're in a bear market. But let's look at the chart from this perspective. In other words, we'll take a longer term chart. And starting from the previous bear market, we'll draw a trend line. As you can see, the situation right now is that is the value of the asset, anime, on the weekly time frame has hit its trend line. As long as we remain above this trend line, we are in an uptrend. So the situation here is still unclear. Because on the one hand, it seems like we're on the verge of a drop or on the verge of a pullback. To talk about whether we'll have a new high in this part today is absolutely unreasonable. And in general, it's difficult at this stage to give a definite answer. We can only talk about probability. And even then, I won't even try to calculate the probability in this particular case. But what's important? It's important to look at the following data. Look, when is it considered that a bearish time frame has started? Here, I have carefully set up the exponential moving average, or EMA. Specifically, I'm utilizing a 21-period EMA applied directly onto the weekly time frame. And as you can clearly observe, any significant bearish movement, let's say the entire cycle really begins when, following a substantial market drop, we often get a significant pullback. And this phenomenon always happens sooner or later in the market cycle. This particular pullback might occur earlier in the timeline, like right here for example, or it could manifest itself much later. But in this specific case, during the previous market cycle, it was incredibly important because every single time we consistently bounced off this crucial moving average, indicating strong support. And let me remind you, we're talking about a long-term time frame. At the moment, our situation is such that yes, there was a correction phase, here it is right here, but for the correction phase to continue, it needs to make a certain pullback. This pullback, at the very least, should return to the 21 EMA on the weekly time frame. That's roughly the 100,000 level. This point will give us the answer as to whether it's really the case. Right here. This is where the bullish time frame, the bullish trend ends, because from this level, roughly, maybe a bit higher or lower, the following should happen. What comes next? First, we have a breakout of the trend line, and we should have, first of all, the following facts. This is a breakout of the trend line. 1, a bounce off the 21-period EMA on the weekly time frame. This will be 1, and this will be 2. A break of the significant previous low is 3, specifically the 80,000 level. And that is indeed the final level is a break of the low that we had in April 2025. That's number 4. Only these 4 factors. These are what will tell us that we are actually entering a bear phase of the market. Where the asset might go is already a secondary question, if we start. But as long as we don't have these 4 or at least 3 main signals, this is what we need to do. A new high that is lower than the previous one, a new low that is lower than the previous one. Accordingly, here we will see a break of the trend line, a break to a new low and another break to a new low. Only then will we enter a long-term bear phase. At this stage, that's not the case. There's no bear market for us. At this point, we're just in a corrective phase after this growth. There have already been such corrective phases in the past, and more than once, when the asset corrected by more than 30%, and this happened more than once before it continued to grow further. I don't remember exactly how much it was here, but it was over 20% something. But okay, we won't use this example as a basis because this was just the beginning of the growth. So, colleagues, are we in a bull phase? I don't know. Are we in a bear phase? I don't know. But with 99% probability, today I would expect a pullback to the 100,000 level. And only then, only at that point, in principle, it will be possible to do a new analysis. As of today, opening a long position, in my opinion, is much more reasonable than shorting the asset or holding any short positions. Pay attention to the daily time frame. In the daily time frame, we are seeing a major compression, a huge compression. We haven't seen compression of this scale in a very long time. When such compression occurs, meaning a surge in volatility, I think in the first 2 weeks of January, we can expect a big impulse, a very big impulse. Of course, according to the theory of probability, most likely it will be an upward move because the probability favors growth. But it's also possible that before this growth, there could be a short squeeze and then the growth will follow. In other words, these are also typical market manipulations to gather liquidity, trigger stop losses, and then drive the price up. So in my opinion, there's a 50-50 chance that it will just go and do that. Something like that, it's a 50% chance, yes, before further growth, or it could set a new low and only then start a new upward move. This scenario, in my opinion, is very likely, so always be careful. You can see the same thing happened here. That is a low that was very quickly bought up. What else is important to watch? Also look at the 21 dash period EMA on the weekly time frame. 21 EMA on the weekly time frame. Notice that very often this zone served as the area before further growth, a pullback. Then, once this level is broken, we'll be entering a bear market. Right now, we've hit this exact level on the monthly time frame. I want to draw your attention to this. In other words, as long as we remain above this level, as long as the monthly candle stays above it, we haven't dropped below, we haven't made new lows, then in my opinion, we're still in the bullish phase of the market. At the same time, the fear and greed index is quite low. So when the index is quite low, right now it's risen a bit, but it was even at 10. Look, I set it to show you 3 months, and you can see that the lowest level was 11, and that was in December. So accordingly, we are at the lows in terms of the fear and greed index. Every time we are at these lows, there is a high probability of a further breakout to the upside. So draw your own conclusions. I wish you an excellent new year. And accordingly, Bitcoin acts as a leader, for example, for Ethereum, which repeats the same story. The only difference is that the calculations for Ethereum are a bit different, but the overall logic works the same way. Basically, we'll do a more detailed review of Ethereum next week. As for Ethereum, I can briefly say that, in my opinion, we have the most modest outlook. The pullback level is 3,500, which is where the asset could return in the next few days. So, peace to everyone. Goodbye for now.